Roku stock is declining following Q3 results. Early in the morning, the price was initially down 17% and it went down by a more manageable 4.5%. This price behavior illustrates how the market is currently in a fully irrational state with excessive price reactions. The results for the quarter were actually better than predicted and much above the company's own forecast for the time. The primary disadvantage is that Q4 guidance is dreadful. Management blamed the poor guidance on macroeconomic factors. By looking at other firms in the area, we can clearly establish that these circumstances exist. Even with the industrial conditions, the guidance is still quite poor. Given that Roku surpassed both guidance and analyst projections in Q3, it's possible that they're being overly cautious with Q4 guidance as well. Given the stock price, it's easy to miss the fact that sales beat forecasts and Wall Street projections. Roku's sales grew 12% to $761 million. Revenue for the quarter was much above management's and Wall Street's expectations of $700 million. New accounts and streaming hours exceeded estimates as well. New accounts exceeded 2021 and 2019 levels. Given the surroundings, not terrible. Roku's platform business generates 88% of its revenue. When someone subscribes to a service like Netflix through a Roku, a percentage of their membership fees are utilized for this purpose, which is mostly advertising. This is the key engine of the company's growth and profitability. To entice customers to the platform, Roku has always offered the sticks at low margins or even at a loss. Platform revenue increased 15% year-on-year above forecasts of $615 million. Highlights of the report include platform income and new accounts. Player revenue fell year-over-year, and losses widened as the average selling price fell by 6%, because Roku shields consumers from higher costs in order to emphasize account acquisition. Management anticipates $800 million in Q4 sales, which is disappointing. Analysts predicted $902.06 million, resulting in a minus 7.5% year-over-year decrease. According to the management, they surpassed their connected TV competition as well as the whole advertising industry. This does not appear to be illogical based on information from other sources. In actuality, the guideline looks to be rather fragile. Roku far exceeded its own Q3 estimates, and it's feasible that it may do so again in Q4. However, due to this unsatisfactory guidance, I continue to feel that investing in Roku should be done with care. The valuation is incredibly low, with the stock price nearing levels last seen in January 2018. Back then, the company's sales was $513 million for the previous year, but it is now worth more than $3.01 billion. Even compared to times when Roku was a much smaller company with an unknown business plan, the stock has never been cheaper in terms of enterprise value to revenues.